Welcome, and here we're looking at the S&P 500 on a weekly chart here, and just wanted to point out the possible bigger picture according to Elliott wave. And as you can see here, we've got a nice ABC correction in this section through here. I suppose I should put up the time factor here. These are years here. So what we're looking at through here is that after an ABC comes an impulse wave, and it does appear that we've got 5 waves in this little section here. So little 5 waves here, then the counter trend into here, and now we're looking for the next 5 waves up. So that would leave us in this point here, the 1, the 2, the 3, the 4 and the 5, and then back here again. So this is basically up for 1 here and back for 2 here, and then we've got 1, 2, 3, 4, 5 here. So we're looking for a high in here, but in the larger structure here. So this would give us, from this low here, this would just give us wave 1 to here, okay, and wave 2 back to here. And this wave 3 here that we're going through now, as I just mentioned, we've got wave 1 coming up through here and wave 2 coming back, and wave 3 here, we're looking for the top of wave 3 here. So that would be, from this point here, that would be up to here, to this one here for that wave 1, that 5 waves in there, and then we're looking for 5 waves in there. So that would bring us little 5 waves in there, and we're looking for the top of that little 5th wave in through there. So what we're doing now, we're counting 5 little waves up into that, and that's what we'll be looking at today, as such. Yeah, but I think what I wanted to sort of point out here is that this is still got, that will be the top of a large third there, and then the 4th will pull back the 38.2% of the 3rd wave here, and then we've got this here. So we're looking above the 2000, but getting to the 2000 is where we are here. And I know from the trading levels too, in terms of once you're at the 1000 here, the next is the 1500 and the 1650 here. You know, once you're above the 1500, then you're past the halfway mark. So there's some important numbers up here that are going to play a part, and that will be 1720, 1772, 1800, and of course the 2000, but the 1900 will kick in too. But the big kickers are the 1800 here, profit taking number. So with that said, we are looking at on the 4-hour chart here. If I come back to here, we've got up for wave 1 and back for wave 2, up for wave 3 here. We've got up for wave 1 here, back for wave 2 here, and this is all the 3rd wave. So we're looking for the top of the 3rd wave here, then the 4th, and then the 5th up through here. And we had this right here in the first place, but then, as you know, I got a bit sort of worried through here with it. So it kind of affected our trading a little bit on the robo method over the last couple of days, because I was trying to balance the books in case we had a C wave down through here. So I took the safer road. What can you do or say, but that's how the cookie crumbles. But the important point now is that we've got up for 1 here and back for 2, and we're looking for the 3rd wave up through to here. So from this 1680 here, we've got up for 1 and back for 2, and looking for the 3rd and the 4th and the 5th through there. Now the 72 number here will come in and play a part, but also always the 1 is the strongest number in the market, followed by 5. So when we've got 1710 here, that's going to play a part as well. If support comes in at the 1705, then you'll get to the next number. So excuse me, so just going into the 1-hour chart now. So, and the Dow Jones is the same sort of pattern as well, and this is the best sort of count I can give it at the moment, is up for 1 here, an A and a B and a C here for wave 2 in brackets. Then this is up for 1 here, an A and a B and a C here for 2, and this is where I freaked out before. But as I mentioned yesterday, technically these lows here would need to be taken out to destroy the positive wave structure to the upside. But look, anyway, anyway, this is moving up through here now. So the top of this little third wave here, when the next session starts, you'll be looking for support on the 1705, stops under the 1703 because that's the way it is, and then up to here. Expect a correction at that point there, and we're looking for 5 waves from wave. You can pull this apart on the intraday, but from wave 2 here up to just above the 1710, you'll be looking for 5 waves up through there, so you need to pull this apart through here. I think we're at the top of the third here, so the 4th and the 5th up to the top of the third here, then the 4th and the 5th up through here. So climbing high, so use the levels there. Now the NFP figures are coming out tonight, so they should be positive because of the ADP figures on the Friday. It's just that we've got that that sort of the event from the left field there in terms of the psychology of the Feds withdrawing the bond buying, but yeah, we'll see. I mean, the China story having good figures coming through manufacturing and in the US last night as well. So there's good figures coming out to to accommodate less purchasing as well. But anyway, up to the upside there, and the Dow Jones is the same. I won't pull this. This is still the S&P 500. I won't pull that apart. I'm running late as it is. Look, simple 15,600. This is a corrective pattern here. You'll see further upside through there. So the Dow works every 100 points. So support on one and you'll be gunning for the 15.7 from that point there. Still have that nice support on the 15,500, even though that it gave us a hard time, through here, but never really became the resistance at that point. And that is a good point to understand too, because when I'm talking about the levels, if I just do an example here, the situation can be, if in setting stops and so forth, you've got a level there, you don't normally get out unless because the market will normally come through and bounce off it, and you'll be safe for a little while, and then it'll come through here. But it's really doesn't find it as a retested resistance at that point. If it did that, then the stop needs to go under that point there, and if that goes through there, then you're out. But you need to allow it to play out, because the question is it resistance, or is it just playing with it? So yeah, it's just a subtle point, but anyway, that's the way I treat it. So if it becomes the retested resistance, then we move on it from that point. Okay, the European markets are same as the US markets, and the general gist was that we've been speaking about all this time was support on the 6. This is the, tested support here. So obviously buying new highs, or if you understand the wave count, that's fine. The same thing again, this is going higher. So you can expect a corrective pattern to occur across the 6,700 here. Once that's in play, then you're looking at the 68 there, and the DAX is the same at 80. Target is 8,500. But expect some type of consolidation around here. So if you're just buying at different prices here, then you need to keep the stop much lower from here. The Australian market as well. It kind of panned out quite nicely yesterday, because we were talking about this little here was actually a corrective move here, and we talked about that. So that means that's an A wave. So we're looking for a B wave here, and then possibly a C wave in 5 waves up here. So that panned out nicely. Then we got this here. So basically we got a larger A, B and C here. So what we can do now is expect this high here to be taken out here, and the wave count up here. This is all the third wave from this point here. Okay, so this is actually up for 1 here, back for 2 here, and this is the whole third wave up here. And in a in a little way, when you're moving up here, it's normally the third wave that reaches here, and there's a fourth wave that pulls back, and it's the fifth wave that moves up here, and then you'll get some sort of, corrective pattern that could pull back into this support here. But this should still move up higher. And the weekly bullish cycle, which it's quite good if you can get your sort of head around it, and it plays out a lot. And if the bear day is on Thursday, which it normally is, then Friday would be stronger, and that would follow through with the momentum onto the Monday, profit taking on Tuesday morning, and then resuming the trend in the afternoon. That's exactly what it did this week as well. Wednesday you get the midweek high, opens, and Thursday the bear day, and so look, Friday and Monday. So we should have a good Friday and a good Monday through here with profit taking on Tuesday. Okay, so look, the just before we go to the resources, I just want to have a look at the banks, because they got sold off yesterday, and there'll be discussion about that. So just using CBA as the main sort of indicator as such, we can see here that this is a really strong third wave up through here. Okay, so and this it's already made new sort of highs here. So it's definitely trending up. This wave count here that I wanted to talk about. Sorry for all the ums. I just got to kind of think ahead a little bit. So I can see in here, it's a little bit tricky to see, but there's a 1, 2, 3, 4, and 5 up here. So that's like a whole third wave there, okay? So this is like a wave 1 here, it's a wave 2 and a wave 3. So this is a wave 4 here, and a wave 4 would pull back. If I just pop that in through there a little bit, like this, like this. So a wave 4 would pull back the textbook anyway, the 38.2%. which is pretty much where it is, and we've seen some nice closing up off its high there, so it's buying volume in there. The only thing that that I could sort of add to this sort of wave 4 here is that if wave 2 is simple, then wave 4 is normally complex. So we may end up seeing something, like this occurring here before we see this other fifth wave moving up through here. And this fifth wave moving up through here would be the same length as the first wave here, or thereabouts anyway. I would be looking at the 76.50 here, which is the halfway point between the 75 and the 78 there. So you'll notice on some of the other banks about this particular little wave structure here as well. In some other banks this is not so high here, so this could be another degree of structure as well in terms of the 1, the 2, and all of this up for the third wave to here, then a fourth, then a fifth, and we'll be looking at the $80 there. That's what we'll be going for. And of course, in another little odd way as well, for this market, this is the 72 playing out through here, half of 144, and 144 is where Gann and Elliott meet, or Gann and Fibonacci meet in their numbers. So it is an important point in terms of geometry as the market unfolds through time and space, because it is some geometrical thing happening out there as life is expanding. So, and we are part of nature as well, even though we don't think we are sometimes. Right, commodities, let's have a look at those. Okay, so this is a daily chart, and it's the Dow Jones UBS Commodity Index. So it's a basket of all the commodities really, but it just gives us a general sort of outlook. We all trade different markets and commodities, but I just wanted to point out about this particular wave structure that's coming down through here. I won't go into the bigger picture, but just this degree, but this degree is enough. So what we can see here, if we look closely, is we've got 5 waves here. That's pretty simple. And then we've got a little corrective pattern through here. And then we'll be looking at the next 5 wave structure down, which will be the 1, 2, 3, 4. So that fits there quite nicely. Yep. So in the bigger picture, we've got that 5 waves and this 5 waves. So we're still short one wave. So if we go, I'll just change this into to an orange thing here so we can see it a bit better. So realistically, we've got wave 1 in 5 waves to here, wave 2 to here, and then if we're looking at wave 3 down to here, well then wave 4 is going to be, there's 2 basic things that we need to look at. One of them is the 38.2 retracement as a target, so we can look at the 132 there is important, the 38.2, which is the 132 here, but of course the 130 is the closest largest number, so that's going to have the most most sort of pulling power, I guess. So that's about right there, and then we'll see another move down here, and the extension is in wave 3 to some degree, so we can look at wave 1 here and wave 5 being the same or close enough. Now, the next important thing here to understand is that wave 2 was simple, so that means that wave 4 here could be complex. The simplest it can get is a 3-wave correction like this, okay? So like that, and then we'll just put that at, we will put that at the 132 there, because that's where the block of supply is there, and the 38.2 retracement level. So in the most simplest terms, we can get the A, the B and the C here, and I feel that that's what we're getting at the moment, this A, B, C here, because we're seeing copper rally on good figures coming out of China and so forth. So we're looking for that. So we're looking for further trend to the upside here. So an A and a B and a C. Now that's one possibility and the likely possibility. The other possibilities, you can see that this little structure in here, this is actually a wave 4 here as well. And you can see how sideways and complicated it is. And wave 4 seem to attract the double zigzags and triangles pattern, so we just need to be mindful of that. But that's kind of where we are here. So realistically, we're looking for a new high in sort of commodities. Well, I'm looking at copper basically, and then we're going to be seeing new lows there. So with that in mind, when we come into the copper market here, we are seeing at 300 here, trading level 3, major trading level, and we're looking at this as, I know this is a corrective pattern here. What I don't know is, can it go higher, how big and messy it going to be. So as I just mentioned in that little thing there before, that we could be looking higher. So we would be looking at a possible up for 1 here, back for 2, 3, 4 and 5 here to finish it. Okay, so that's what we could be looking at here. And the important part of this is it's going to drive the BHPs higher as well. This wave count here would need to be changed. I know this is corrected because of this A, B and C here. That really sets the standard for the rest of it here. So what I don't know is that this is more likely to be this is a 5-wave structure here. So this is going to be part of this. So it would be something like where are we? It'd be something like this would be something like an A wave to here. No, this is definitely a B wave to here. So we've got to bring this over to here. We've got to bring this to here. And this makes the A wave either to here, and having this as an A and a B and a C, which is most likely here. So we need to change this here to an A wave here, a B wave to here, and then the C wave into this point here for the B wave here. So that's what we're looking at here. So what we're going to be doing next week is we're going to be tracking this up through here, and it's important because it gives us to being long on BHP. So just drilling into that a little bit here, I've done a bit of work on it, and we started counting this yesterday up here. If you remember, we had the little 1, 2, 3, 4, 5, and then from here we've got 1, 2, 3, 4, 5 to here for the third wave, the fourth and the fifth here. I'm also mindful that this could be here, this here could be the third wave to here, the fourth to here, and the fifth to here. So, and then a fourth to here and a fifth to here. So we could have a top in here at the 18 here. If that's not the case, then we get one more push to here. And once we get to here, then that will be the top of the fifth. Then we'll get the A, the B, and the C here. So we'll either get it from here, or we're going to get, I mean, this is just a fourth wave. It shouldn't pull, it can't take over can't come into this price territory here. Otherwise, if that's the case, if that moves into here, then we do, that fifth wave here is sitting at the top here. Okay, but otherwise this will push up to this point here. If it does break down through to here, then we can look at this as being the A, the B, and the C to here, and then we'll see further upside from that point. So either way, it doesn't really matter that much. I know a lot of people don't trade copper, but what we do use it for is to look at the BHPs of the world. So with BHP here, as you know, we've been looking at this is US BHP here. We're still in this corrective pattern here, and as I mentioned before, we're looking for a break to the upside. So it could give us this kind of structure here, or it could be done and dusted or here already in terms of basically just having that move up from here. So buying new highs here is the go. The Australian market, of course, is more in tune with people actually trading it. So, if you've been long for a while, because we were talking about taking the long trades through here, then either taking profit at the 35 here, but it is pushing higher. But I do think that we could be looking at the arrival, the reaction, the first high above the level, and then the little A, B, C here, and then further up through here. So 36.50 is what we'd be looking for there. So bit of a tricky one to trade, but there you go. You might be better looking at FMG or Rio or something. Okay, the oil market is pretty much on track. This is Brent here. We were looking at Brent yesterday, and we were looking at this being a corrective pattern as it broke a little bit up through here, and it's continuing to do that through here. So if you're trading this, you would exit it at all the ones, being the strongest number in the market in psychology terms. So the Western Texas sort of helped us here in deciding that this was also a wave 4 here and pushing to the upside here. So we've got impulse waves to the upside through here. Can't remember if I've counted this or not. I haven't, but the main point here is that what you'll need to do here is it looks like the top of a third wave here as such. 1, 2, 3, 4, 5. Look, you're just going to have to be careful here. Expect further upside, but also try and look for some sort of little pattern here where you can, get the further upside. But it is going to follow stock and the S&P 500 basically, and move higher. So it does appear that there's a little 1, 2, 3, 4, 5 here, but I just need to focus on that a little bit further through there. But after 5 waves comes some type of correction, but you do want a solid support there, and you do need to be careful. You chase it above there, there's a very high probability that's going to come back, and catch you out here. So you'd still need to leave the stop, really, really low, out of the way here, So the gold market is bearish. But it still quite hasn't broken any sort of rules on both sides yet, because this move up, if this is wave C here in terms of an A wave and a B wave, as we were talking yesterday, and a C wave down through here, then this low here becomes really critical. If this market moves down here and makes a new low here, then we've got a larger bear market possibly unfolding from that point, and that would be, in that case, that would be down for 1 here, where that 1 is there. This is back for 2 here, and then we'll be looking down for 3 down through here. So even if this does come down, breaks this low here, then it's still going to bounce off here, and it could come back to this point here. So what we're looking for is a nice clean retest on this one here and failing from that point. You could get it from there. The other point is obviously getting it, making sure that it's got a nice solid retest before going to the downside here. Yeah, I mean, if support is found, normally we'd wait for the support on the top of Group 1 here, the 30. But if it occurs on top of the 20 here, the pivot, then you would go along from that point after this, because this move as it stands up here can be up for one, and A, B, C, back for the A wave, the B wave, and the C wave right to this point. So it could build from here. So you just need to be mindful of that. So it's working itself into a corner. However, the bearish bias is all these lower highs here and all the way through here as well. And normally when you're looking at a third wave developing in the market, be it down or being up, you can use the trend channel. So you just take the highs here and the lows here. So normally a swift breaking of that trend channel here is the signal that it's the third wave. So if you're going to short here and you feel like it's going down, then get just small positions in this section here until that 300, 1300 becomes the retested resistance from that point there. So because in the bigger picture, we are looking for a high, and we're just wondering if this is it through here. So this could be the start of the movement to the downside. But the other side of the coin too is that base metals and precious metals, can have a relationship there with some degree, and that they're going in the opposite directions at the moment. So it's good to, not that sort of harmony there, but that harmony comes and goes as well, which I wanted to have a look at the US bond market as well, but it's on the other template with the stocks. So, but finally we got the bonds going down and the stocks going up. So it's telling me that things are like normal, back to normal, so to speak. Alrighty. Just the other one too. Just going to start having a look at some soft commodities. I haven't quite got my head around it all just yet, but thought I'd have a look at corn, as corn is probably one of the biggest commodities in the world. It's pretty much in 90% of products. So anyway, daily chart, corn, the movement down through here is bringing this into the third wave here. So we've got the fourth wave correction through here. So from the fourth wave, we're just quite simply looking for 5 waves down, and the 5 waves would be got first wave 1 here with 5 waves in it, wave 2 to here, wave 3 into the 472 area through here, a retest back to the 500 as wave 4, and then wave 5 down, which will bring us down closer to the 400 and the 420 there. The wave 5 should be the same length as wave 1 through here. So there you go on that there. I don't know if I've got a smaller chart here. Okay, I do. Right, well this is corrective here, and this low is going to be taken out through here, so a small short down into this area through here. 85 is the most important number from the 90 to the 80 here. The 85 as resistance would get you to the 80 here, but we need to expect a bounce coming shortly, so it will probably come in from here, and if you can count this here, we're looking for 5 waves down through here as well in terms of the 1, 2, nice strong third wave here. This is a little fourth wave and the 5th wave down here, so we'll be looking at some sort of bounce from this point here. Okay, let's have a look at FX. Okay, starting with the euro here. As you know, we were looking for a top, and well, it could be in place now. So the wave 5 of C of 2, which means that if that is the case, then we'll be looking for new lows below this this low here. Of course, that's a long way away, and before I'd really sort of call something like that in, I would need that 130 there to become the retested resistance at that point there. So that's something that's sort of out there in the future, but in the interim, this particular move down through here that we're seeing come off the highs here does appear to be in 5 waves. So if that's in 5 waves, then we would get, well, a counter trend, wouldn't we? Would get 5 waves down here, then would get a an A and a B and a C, a counter trend, maybe retesting the 130, the 133 there, but the norm would be the 50 to 60 1.8 retracement level from that area there, and then a move down through there. But also saying that too, we know that the euro has very shallow retracement levels, so we need to look to the lower side rather than the higher side. The other thing here too is at this top of this A wave here, the breaching of that, I'd want to see a reasonable breach like this here, then that gives us the overlapping wave structure, and then that basically helps confirm that this structure here is a corrective move. So that's something that that we need to keep in mind as well. So this move down through here, it does appear to be in 5 waves. So we can do 2 things here. You can either wait for the 132 to become the retested resistance there and use that. This is just a very basic trigger, but works okay like that. Or that might push up there higher. It could be a variety of things that sort of happen at this point, and depending on what you know and see at the time, then you deal with it. But this does appear to be like a 5-wave structure down through to here, so that might just be. I just really need to have a look at that internally. Just what have I got in here? Okay, this is better. Sorry about that. It does appear that we've got 5 waves down to this point, and that's okay for there. Then this is, let me see, it's a bit, I can see that being the 3rd there, the 4th and the 5th, but it's a bit, not a bit overlapping wave structures. It looks more corrective to me actually. So this is the pivot through here. This is, at the end of the day, if this top of group 1 here, the 30 here, becomes support, then you need to trade long from that point. That's one point, okay? So that's at that point you know that you're wrong if you're looking to short. So I think the shorts are better weighted if this becomes the resistance through here, then trade that through there. But while it's above here, then we have to allow it to have its day in terms of the 61.8 or the 50, up into this area through here. This is the supply and the resistance up through here from the 40 to the 60. That's the problem. That's the situation there. So if this area becomes the support, you need to be long from that point there, and short would be the bias from this point through here. There is, of course, this happening through here as well, so it is negative through there, but I think I'll just wait for the volume flow to come in to see if this is the case down through here. But we can have a turning point in there because we've got the US dollar here above the 82 here, and this structure up here seems to be impulsive as well. So the only other thing that I could think that it could be, this is definitely 5 waves up through here. The only other thing I can think of is that this wave 4 here is over here, so we've got some type of A wave to here, B wave to here, and a C wave that would finish up here somewhere and then down from that point. So that's a possibility. We'll keep an eye on that. But what we're looking for here is we'll get 5 waves up here. After 5 waves, we'll get some type of counter trend. If it is a counter trend in 3 waves and get the overlapping wave structure, then we're to the upside at that point there. But in the meantime, this structure here that's come off the lows here is definitely in 5 waves moving higher through here. So you need support at the 82.50 would be the next one, and there'll be problems at 82.72 here. So you would need that as support. So expect a corrective pattern in here once you've got support on the 82.50. Okay, the Australian dollar is in the media, so I just thought I'd have a look at the bigger picture here for a moment. So this is a weekly chart, okay? So you probably know this already if you trade the Australian dollar. So we're looking at this being the top of primary wave 3 here. And we're looking at all of this just being the normal corrective pattern across trading level 1. You know, it could be $1, $10, 100, 1,000. It doesn't matter. It's all just one. And it is a corrective pattern because from the high here, the first move down through here is in 3 waves. So that's telling us that the rest of this is corrective, okay? So in saying that, we can look at this as an A wave and a B wave to over here. It could probably be better labeled as a W and an X and a Y, but it doesn't really matter for the purposes of it. We're looking at it being the top of a 3rd wave here, a 4th wave here, and then the 5th wave up higher than the top of the 3rd here, going up to 120 or 130 or whatever. So our main focus at the moment is looking at this trend coming down through here. So in that being the case, I mean, of course it's trending down because the RBA is you know, pouting, you know, lower rates to be one more rate cut, but that rate cut may not come because, you know, the US are producing good figures in manufacturing and employment and so forth. So, but that's a bit of a guessing game, and it's not my area of expertise, so I'm just good with patterns. So in regards to patterns, we're looking at this being down for 1, back for 2, down for 3, back for 4, and down for 5, which will leave us down at this trend line through here, which is down around the 88 area here. So if we drill into this here and have a look at this, then we would be looking at it like this. Well, here we go here. So just drilling in closer and closer. So on the 90, we've got our wave 3 and our wave 4 here, and then we're looking for wave 5 down through here in 5 waves from this point, the 1, the 2, the 3, the 4, and the 5 down through to here. On drilling down to that on the 4-hour chart, it would look like this here. We've got our wave 4 here, we've got our wave 1, our wave 2, and we're looking for wave 3 down through here. That's probably not quite finished yet. Once that occurs, we'll see the second retest come into the 90 area through here. Once we do get our low in here, then we can have a look at the 38.2 retracement level. But from the 89 here, the 38 point retracement level is actually 90.50 here. So let's get our low in here first. But also we've got to take in consideration the closest largest number as well. So, but anyway, where we're up to is wave 3 coming down through to here. We'll be looking at wave 4 and wave 5 here. We may not have finished this just down here just yet. So in drilling into that, we're looking at this here on the hourly chart now. So wave 3 into here, because counting from this point here, the 1, the 2, the 3, the 4, and the 5 here, or that could actually be it over here, and this can be the A, the B, and the C for wave 4 here. Not that it matters that much at this point in time, so we need to be looking at this structure down here. So we are looking for this wave 5 of wave 3 here, then wave 4 to come back and wave 5 to come down into this little area here. So, you know, other numbers start to become important here as well, and of course the 89 is the important here, and we can expect to bounce off that, but the bounce just while we're here is important. So when it does come down, it looks like it's having its first bounce now, but the height of the first bounce is important, because when it comes down for the next one, if the next one is lower like that, then you've got those lower highs there, and then you can start feeding in positions in this area through here. It's still going to bounce off here, but if you get a few positions above it, then once it does lock under here, then you've got some, you know, this is where the real trading begins coming through here. But if you can get a few in your back pocket here, a bit up your sleeve, then it makes it a little bit easier. So just drilling into this here a little bit as well, just on the 5-minute chart here. Just give me a second here, just have a look at this here. Right, this pattern here is corrective, okay, because, well, it just is. And this A, B, and C wave here. Okay, so that's the three-wave structure. That makes it corrective. Well, what makes it corrective is the fact that this has moved down so far through here, even though it's offering obviously it's offering good support, so to speak, but it can just be the A wave as well. So there can be more to come. So if this low gets taken out here, then you need to short it at this stage here. This is the highest bounce so far, so you can take the low of this one out. If this is just the A, B, and C here for the A wave, the B wave here, and then the C wave could be moving up 1, 2, 3, 4, 5, if that's going to be the case. And that would be the end of it, because then that would be the larger A, B, and C to here, and then it would work down from this point here. Okay, so if it does take this high out here, that's where we're going to, and what you'd use here, of course, is this number here, the 89.30, which is the top of group 1. So you want support on that before you go up to the 89.50. That's where you'll trade that to. But this 5-wave structure here, the 1, the 2, the 3, the 4, and the 5, all you're doing really is just trading this up a little bit higher through here. So just be mindful of that. If this breaks down through here, or if the 89.20 becomes the retested resistance, the pivot within group 1, well, then you'll be short from that point there. There's not a lot into it. I mean, trading short in group 1 is not really the sort of done thing, but in this particular case here, you know that this is corrective here, so you know that this low will be taken out here, but at the same time you've got the 89 here as well, so that's going to cause problems. Going to get sort of bouncy within this area through here. Yeah, and that's that, I guess. So alrighty, thanks for listening, and enjoy the weekend.